Welcome, ladies and gentlemen. Precious Metal Summit 2019 here in Zurich. And with me here now is for the first time FPX Nickel, and Martin Turenne, who is the President and CEO of the company, wants to give us an insight. Welcome.
Thank you for having me.
Yeah, great to have you here. FPX Nickel, what is the company about? Where are you working? What are you doing?
Sure. So we're based in Vancouver. We trade on the Venture Exchange, and we're focused in nickel on a single project. It's called the Dakar project, a very large-scale PEA stage nickel deposit located in central British Columbia.
Oh, wow. So that's right in front of your home door.
That's right. Yeah, it's easy to get to. That's kind of part of the reason we're based in Vancouver.
Yeah. Okay, fantastic. So what have you done so far this year, 2019? What happened?
Yeah, sure. So we've got a very large-scale project. We've had a few different resource estimates put out on it, including one last year in 2018. The focus really in 2019 has been on metallurgical optimization of the project. And so we've had a few news releases on that this year, the most recent of which in August showed that we're producing nickel with very high recoveries versus what had previously been assumed in the range of about 86% or so, to produce a very high-grade nickel concentrate, almost 65% nickel content, which would be among, if not the highest grade nickel product or nickel concentrate in the world. Fantastic. So that's been a great development for us.
And that would be done with Davis tube, I saw on the presentation.
That's right.
That's a standardized process, I would call it, right?
Yeah, that's right. So Davis tube is a way of measuring the mineral content of magnetic minerals. And so our nickel mineral is present in the form of a mineral called awaroite. And so awaroite is highly magnetic. And so it has a very great ease of metallurgical simplicity compared to more complicated laterite and certain nickel sulfide deposits, which can be a lot more complicated metallurgically.
Yeah, fantastic. I assume that makes it also cheaper than for future production, right?
Yeah, so the operating costs really are going to be a function of really the power cost, the grinding cost to grind the material. From there you have magnetic separation and flotation, which are very simple processes and processes that have a very sort of benign and low sort of environmental impact as well.
Great. Can you give us some more numbers on the PEA you had from 2018, please?
Yeah, so the PEA actually was done back in 2013. We're currently working on potentially doing internal trade-off studies toward a potential updated PEA in 2020. The 2013 study modeled this to be one of the largest nickel mines in the world, actually, to be one of the 15 largest nickel mines in the world if it was in operation today, producing over 80 million pounds or just under 40,000 tons of nickel per annum over a mine life of at least 25 years.
Wow.
We now think that mine life will probably be closer to in excess of 30 years, and annual production could be well in excess of 40,000 tons. So this could be one of the 10 largest nickel mines in the world by annual production. It could go on for at least 30 years, so be sort of multi-generational, and we believe it'll have operating costs within the bottom quartile of the cost curve as well.
Fantastic. Can you already quantify the cost a little bit, or is it too early?
So the costs in the previous PEA were around, on a dollars per pound basis, around $3 US per pound, and our current view of costs within our internal trade-off studies is right in that range as well. So again, within the bottom quartile of the cost curve. So given the scale and the low costs here, we think this is something that could be attractive for major mining companies.
Fantastic. And initial capex around?
Yeah, so the initial capex in the previous study was close to $1.4 billion
so that's
US.
A big boy.
It is a big number. That scale of nickel mine operations typically can have capital well in excess of $3 to $4 billion as we look at the last generation of nickel mines that were built in the 2010-2011 period. We actually think the capital in our new study is actually going to be higher than the previous study. We think that as we re-engineer the project from the ground up on about the same scale, that we're seeing higher capital numbers due to inflation and in our view, some misestimates that were done by the previous operator in the previous study.
Fantastic. As nickel is a metal, I would say, which is highly undersupplied for the future, definitely. And also I saw the warehouse inventories are going down. Yeah, so you're on the right market, obviously. That's let's say the development time is at least several years to do that, of course. Yeah. So what do you want to do 2020? I mean, to bring the updated PEA is probably the master target, right?
Yeah. So there's a couple of things we're working on. The first is the internal trade-off studies towards that updated PEA. We haven't formally guided the market on the timing for a PEA, but we think that's a possibility for the first half of 2020. but kind of stay tuned for that news. The other thing that we're working on is leach testing on our nickel concentrates. So we're taking these very high-grade nickel concentrates, which we think are suitable as direct feed for the stainless steel market. We're also going to submit them to leach testing to see if we can produce nickel in a solution or in a chemical form, and therefore have that product be available as a feedstock into the EV battery market for the production of nickel sulfate, which is the chemical that actually goes into the batteries.
Yeah, fantastic. That's a nice hint on that. So how do you see the market now? I mean, EVs are really taking up since this year, or picking up, I just saw that the latest sales were really up again, like 43% for this year already. And so it looks to me like lithium-ion batteries, okay, it is the standard for sure, but what I read in every presentation is already a little bit more like, oh, there's more nickel inside, more use of this. So what's your take on the market?
Yeah, so big picture, nickel has been in a state of deficit since 2016. So demand has been consistently exceeding supply since the beginning of 2016. And that's really based on a couple of factors. One is continued strong stainless steel demand growth, which is the sort of the bulwark of demand for nickel, combined with relatively sort of flat or flat-ish supply growth over that same time. So you've had this sort of this demand gap or the supply gap open up. The EV battery market has not really, in my view, sort of significantly impacted the fundamentals of nickel. That's more of a forward-looking thing. And it's sort of the cherry on top of an already very bullish case. So depending on your view on how many EVs you're going to see on the road here in Europe and in China and North America in the coming years, that will only further exacerbate the supply deficits that the nickel market has been facing, and and raises the possibility of future prices going even higher than they are today.
Fantastic, good. So the market looks good for you guys.
Absolutely, yeah.
Great. Yeah. Because I could imagine, I mean, a large project like this for, let's say, a junior company is probably 1.4 billion is a bit too much, So have you been already approached, or do you have already partners in that project where you would say, okay, my partner is large enough that we can develop it together, or you would say, you know what, we explore it, we bring it to a certain stage, and then probably we put a large partner in, but we keep, let's say, an NSR or whatever. Yeah,
so ultimately, this project being one that we think could be one of the 10 largest nickel mines in the world, and having the mine life that it will, we think that ultimately this will sit in the hands of a major company. So everything we do between now and that point is to de-risk the project to the highest technical standard. So that it withstands scrutiny from any strategic investor looking to get involved in it. We haven't seen the major companies invest in greenfield nickel projects since the last cycle, since the 2010 cycle. We think going forward, for those companies that are involved in nickel now, the vast majority of them have declining production profiles. If they want to stay in the nickel business, they're going to need to build new nickel mines in the 2020s. We think this project will fit perfectly into one of their portfolios.
Yeah, you are definitely one of the targets, I would say.
Yeah, absolutely.
Yeah, fantastic. What is cash in the bank?
Yeah, just
what's management share?
Sure. So currently, cash in the bank is just under 2 million Canadian. So we're well financed for all of our 2020 activities. And management owns about 18.5% of the company. So we have very significant insider ownership of this company. And that has been being accumulated steadily over the last several years. The company's been public since 1996. So these are not cheap founder shares kicking around. These are shares that have been bought in private placements and in the market with real money over time.
And that's exactly what I wanted to ask. It was not given as a Christmas present.
No, it wasn't. No.
Fantastic. Well, I think everything looks really promising, and you are in the right market to the right time. So I would say keep it going, and we look forward to hear more from you.
Great. Thanks for having me.
Thank you very much.
Okay.
Yeah, ladies and gentlemen, there was FPX Nickel with Martin Turenne, the President and CEO, and it is a real large nickel project. 1.4 billion probably is the capex around that. And as Martin said, one of the 10th largest probably in the future. And he is completely right. This is something for the hands of a major, which want to maintain their growth profile, maintain their nickel production in the future. And what they can do is, let's keep it going and make the bride look good. So that's the very simple thing. And so from that side, fantastic jurisdiction, right metal, right time. Batteries are improving, more nickel content, and also the steel alloys. So check out the company. Thanks for watching us, and bye-bye from Zurich.